Hi everyone, this is a technical analysis on EURUSD. Let's start with a fundamental overview first. The USD got a boost from the strong US consumer confidence data, which triggered an aggressive rise in long term yields. The report, however, just showed that the labor market remains resilient, which is good news for growth and not necessarily bad news for inflation. The greenback benefited also from the risk of sentiment, which seems to be caused more by the month end flows rather than a fundamental driver. The euro, on the other hand, has been gaining ground against the USD mainly because of the dollar weakness and the risk on sentiment. Moreover, the recent data from the eurozone has been generally good, with a pickup in the PMIs and high wage growth, which led to the market scaling back a bit the rate cuts expectations. If we go back into risk on sentiment, the greenback could start losing ground against the euro again. Now, on the daily chart, we can see that Euro USD couldn't break above this key 109 handle and sold off into the 108 level following the US data and the risk off sentiment. The price is now trading a bit below the 108 handle, which technically opened the door for a drop into the 107.27 level next. The sellers will likely look for an entry here around this level to position for a continuation of the drop with a good risk reward setup. The buyers, on the other hand, will want to see some key breaks on the lower time frames to indicate a change in the momentum. On the 4-hour chart, we can see that the price pulled back into this recent support turned resistance around the 108.12 level. This is where we can expect the first rejection, with the seller stepping in with a defined risk above the level to position for a drop into the 107.27 support. The buyers, on the other hand, will want to see the price breaking higher to invalidate the bearish setup and position for a rally back into the 109 handle. On the 1-hour chart, we can see that we have a good resistance here at the 108.12 level, where we can find the confluence of this downward trend line and the 38.2% Fibonacci retracement level. This is where the sellers will likely step in with a defined risk above the trend line to target the 107.27 support. The buyers, on the other hand, will want to see the price breaking above this resistance to invalidate the bearish setup and start targeting the 109 resistance. Today, we will see the Eurozone unemployment rate and the latest US jobless claims figures. Tomorrow, we conclude the week with the Eurozone flash CPI and the US PCE reports.